Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 29th of January. Starting with the FTSE 100, which seems to have risen despite the Evergrande issues in China. Obviously, nobody really cares about that anyway, but here you can see that we've broken through the 50 and 200-day lines at 75.65. Above that, we've been looking for up to 7,800. Hopefully over the next couple of weeks, if we're lucky, but giving it till the end of next month, given how bad the price action has been on this market, just within that range between 73 and 7,800 for much of the past year. Moving on to the DAX, and here the market stalling near the better levels, near 1,700. We obviously we need to break that 17,000 level to give us a new leg to the upside towards 17,900 by the end of next month. Hopefully we'll get there, but at the moment we're sort of stuck at the breakout level, 16,500, and also the floor of that channel there, and the 50-day moving average, 16,600. So hopefully any setbacks for this market won't be any greater than that. Moving on to the Dow, and here you can see that we were on the right side of the 38,000 level, as we said yesterday with the update of the weekend. 39,600, 39,700 at the top of the October channel is what we're looking for, and that's valid while we hold above the floor of the channel there around 37,600. Bitcoin seems to have been trying to rehabilitate itself after the anticlimax of the ETF news, although obviously we rose significantly ahead of that news. Current position is that we're trying to get an end of day close above the 50-day moving average, 42,700, in order then to open up the prospect of a retest of 49,000 sometime by the end of next month. On the downside, 38,000 to 40,000, the range we're expecting. We already had that. That's based on the old November resistance, which was from 38,000 to 40,000. More precisely, 39,400 at the floor of that August rising trend channel is the place we are looking at. Moving on to gold, and here hoping that this market will be able to stay above the 50-day line, which is still rising there at around 2034. Want to see this market break 2060 really, to which is recent congestion for this market, and that resistance line from December. Above that we're looking for 2100 over the next couple of weeks, and up to 2160 by the end of next month. On the downside, below that 50-day line risks a move down to the floor of that rising March 2023 channel at 1980 by the end of next month, but hoping that we are facing north. Moving along to the stocks, and another look at Beowulf Mining, which is making good progress. We've got the initial target there at 2.4 pence, and hopefully we'll get that by the end of this week. Bigger picture target maybe by the end of next month up to 3.6 pence. And that's valid while we hold above resistance on the way down around 1.8. So above 1.8 looking for 2.4, then 3.6 at Beowulf. Cyanconnode also popping up quite nicely at the moment, breaking through the 200-day line there. Initial target here up to 16 pence, and then after that really looking for March resistance at 20 pence, March last year that is, at 20 pence by the end of next month. Upside value while we hold above 12 pence, which was the second peak for January, i.e. this month. A bit of a more longer dated call on CloudCoco, which apart from its amusing name has also tried to rehabilitate itself. We've got an extended resistance line there from the autumn of 2021. That is running at around the 0.96 pence level, so looking for an end of day close above that to open up the prospect of a move up towards 1.35 pence over the next month or so, maybe by the end of February. The upside value the longer we stay above the 0.9 pence area, which is the area of the 200-day moving average. Global Petroleum is next, and here's one that I have to type out every time, which is slightly irksome, but here we've got a situation where we're still looking for a rising trend channel base, the top of the channel there, 0.16 pence, and we're looking for that while we're above the 50-day moving average around 0.08 pence in the meantime. Nice bounce for the RSI at neutral 50 over the recent past. that suggests that we should see a reasonable breakout any time soon. On to one of the best performers of the recent past, Golden Metal Resources, where the presentation at First Equity the other week seems to work well. Here we've got a rising trend channel which has been placed since August, the top of the channel there at 22 pence, which we're looking for by the end of next month, the longer we stay above our previous target here at 16. I think we were looking for 12, then 16 and 20 before, but now we've upgraded that to 22 pence by the end of next month, backed by the way that we've got an unfilled gap to the upside that we had last week. So that charting working well on that situation, as did the golden cross buy signal that we had around the 12th of this month as well. Moving on to Helium 1, which seems to be the gift that keeps on giving at the moment. Here we've got a situation where we were hoping for the gap to fill up to 0.72.5. That was filled and broken. And above 0.72.5, looking for the 50-day moving average as high as 1.4 pence, which would obviously complete a stellar recovery, and looking forward to all that helium oozing out of the ground over the near term. But the stop loss there at the top of the gap there from back in December, 0.72.5. Above that, the 50-day line beckons. Another situation which has risen out of the blue perhaps is Inspirit Energy. Here we've had years waiting for the definitive move, and maybe this is not the one either, but above the 50-day line there, 0.01 pence, looking for a move up towards the 0.023 pence, maybe over the next couple of months. But as you can see, over the recent past, any spike in the shares has been sold into even on the same day. Moving on to MediaZest, which is looking decent in the sense that we've had the second day and a decent push above the 200-day moving average. That's around 0.047, well, 0.048 rather, and above that looking for 0.07 pence over the next 2 to 3 weeks, which is the top of that rising trend channel base from back in April. But the key here is holding at that 200-day line. Finishing off with something of a binary bet, which is an interesting situation in the sense we're waiting for an EU thumbs up or thumbs down. What's even more interesting is that the shares have rallied quite sharply in Symphony even before we know the results, suggesting that some people don't want to risk the EU giving the thumbs up to the company. That means that we're looking for, and we have been looking for, 6.3 pence in the 200-day line as an initial target, and then up to 11 pence by the end of the next month, presumably on the basis that the EU is a positive force here. On the downside, if we fail, then probably the 4.5 pence area, which was resistance on the way down, would be support at this time. That's it for me today. More updates tomorrow.